U.S. Treasuries are no longer neutral reserve assets. They have been made into political tools of the G7. And if you're not in the G7, it is possible that you might one day come under the disdainful eye of the U.S. Treasury, the eye of Sauron, if you might like. And Trump's sort of pushing for the canal and calling Canada the fifth first state and, threatening to take Greenland. All of that is sort of spooky to central bankers who are looking at their reserves that they may hold in U.S. Treasuries or European debt and decide that gold is the only truly neutral reserve asset.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 27th through February 3rd, 2025, while supplies last. This week, backdated 1-ounce silver Austrian Philharmonics are just $2.85 over spot, one of the lowest prices we've had on a sovereign coin in years. Next, AU pre-1933 $20 gold St. Gaudens coins are just $50 over melt. We also have 90% constitutional silver or junk silver at just $1.69 over spot per ounce. We also have the 1/10 ounce UK Gold Britannia coin at just $29.99 over melt. And finally, 1-ounce gold Canadian maples are just $59 over spot. Again, one of the lowest prices we've had on gold sovereign coins in years. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're glad to have this returning guest. Doomberg joins us today. Today is Friday, January 24th, 2025. Doomberg, thank you for coming back on Liberty and Finance.
Again, great to be with you. It's day 4 of the whirlwind, I guess we could call it.
The new Trump presidency is in day 4, and we're going to talk about that. First of all, just welcome back to our channels. For those who haven't seen you on our channel before, you provide analysis and outlook for a number of markets, notably energy and commodities and metals. We want to talk about all of those, and particularly the fate, as you see it, the outlook for energy and commodities and metals, given the new Trump presidency and the expressed intentions and policy direction thereof. There's been a lot of concern about people's wondering whether we are in fact going to get back to domestic independence of energy and lowering costs, and that being something that's effective against inflation, or whether it's a lot of talk and too much of the direction that things have been heading is baked in the cake and it's too hard to turn the ship. You've just done a report on that today. If people want to check that out, called Whiplash. So I want people to be aware of that. We'll tell them how to get a hold of that later in the interview. But if you could kick us off by telling us your view of what is actually achievable for the new Trump administration in each of those areas of energy, commodities, and precious metals.
Yeah, great question. That's certainly the question of the day. It's one that we tried to begin to address in today's piece, although the pace of change has been such that there's an enormous amount to unpack. At the highest level, it is just undeniable that Donald Trump is a transformational figure, a force of personality, unlike we just haven't seen it in decades. And the title of this morning's piece, Whiplash, was meant to convey that concept that he is in the process of executing a total 180 over the policies of the Biden administration. And there's some great things about that, and there's some bad things about that, and there may even be some ugly things about that. And we tried to scratch the surface of all three today. At the highest level, it is undeniably bullish for energy production that Donald Trump is the president. To the extent that red tape is even temporarily eliminated, the power of the pulpit is undeniable in this regard. I think, appropriate rolling back of substantial investments being made in what we believe are very poor energy alternatives to the standard baseline type fuels such as oil, natural gas, coal, nuclear, hydroelectricity, namely wind and solar, is all very positive. And just the signaling factor alone will deliver a much needed boost to the energy sector. That is very bullish for energy supply. It is bearish for energy prices and bearish for energy equities, except for the subset of energy equities who provide services and for whom revenue is a function of volume, not price. So that's the highest level. There's some cautionary tales. This is all done by executive order. Some of Trump's orders, we believe, are constitutionally dubious at best. And 4 years is no way to run, an energy-intense capital planning cycle if you're a business. And look, as much as we think sort of offshore wind was a terrible idea, they went from love to hate it in a flash, and equity stacks were wiped out, and people will lose jobs, and they were, frankly, responding to market signals that the government was giving out in the past 4 years and then some. And so it's a bit unfair to those people, regardless of what we think of the policy. And for Trump to just do it by the force of his pen, as opposed to the traditional constitutional order of the Congress passing a bill that the president signs and the courts interpret, that's the sort of ugly side of things. The fact that the country has devolved to the point where one person's votes in 7 states basically makes night and day difference for all 330 million of us can't be what the framers had in mind when they set about the task of constructing the institutions that would lead to the greatest country on earth. And so, sure, everything Trump is doing, virtually everything Trump is doing on the energy sector, we greatly support in principle. But at a higher level, there's much to be concerned about. And let's hope that this is sort of a grand correction, which is swiftly followed by a return to constitutional norms.
In the arena of domestic energy production and pricing, can you talk to us a little bit more? You mentioned good for supply, not so good for prices or for equities. Can you, other than those who are supporting the industry, can you tell us whether Doomberg's outlook is that the actual impact on inflation, because it's been said by many of the analysts visiting our channel that energy affects prices of almost everything else in the country one way or another. Can you talk to us about whether your outlook includes a noticeable impact on actual inflation, price inflation? I guess I'll have to limit that too, because it is not directly affecting the currency supply, but the prices of goods and services in the U.S.
Yeah, I think it is pretty undeniable that countries that are awash in cheap hydrocarbons generally aren't subject to bouts of inflation or even hyperinflation, with notable exceptions for sort of traditional petrostates. But the U.S. has the huge advantage of a significant downstream manufacturing sector to take advantage of dirt cheap energy. So Joe Baby Drill is bearish for energy prices, which is bearish for inflation, or bullish for inflation if you want it to go down, with one potential exception. Something we've been writing about for a very long time. Natural gas in the U.S. has been trapped here and has been very, very cheap for a very long period of time. And that is coinciding with an explosion in demand for AI data centers, which we think is real. We don't think it's a fad. There are some characters and some companies in this space that are clearly exhibiting the signs of bubble-like behavior, but AI is a fad as much as the internet was a fad before the dot-com bubble. I think that's what's going on in that space is just mind-blowing. And natural gas is the perfect bridging fuel for AI data centers. And we've predicted and have been writing for several months now that natural gas will go into one end of a building and data will come out of the other. These will be off-grid, but there's a huge demand for natural gas. And the price that data center operators are willing and able to pay for natural gas is much, much higher than it's currently trading for. And the U.S. has dotted all across its manufacturing sector hundreds of cogeneration facilities that turn natural gas into heat and electricity. And if the price of natural gas spikes, then that could run counter to the deflationary impact of an overall increase in the energy supply. Sort of counting up all the flows to get a net effect is challenging because AI is growing exponentially. and we don't see how it doesn't continue to do so. So those are the sort of the trends that we're watching. The ratio, one of the most important ratios on the board, in our view, is the price of oil divided by the price of natural gas at Henry Hub. On an energy content basis, the ratio of oil divided by natural gas in the units that they trade should be 5.8, because there's 5.8 million BTUs in a barrel of oil and 1 million BTUs of natural gas is the current price quote. When we wrote generational arbitrage last April, that ratio had blown out to 55 because they just couldn't give away the natural gas, which is being co-produced in places like the Permian as a byproduct of oil production. And the price of oil has been artificially held up by OPEC. And so we have this sea of natural gas in the US, but that ratio is coming down. And if natural gas truly does become the bridging fuel for AI, which we can't imagine a scenario where it doesn't, in fact, that ratio could plunge all the way to parity or below. Right now, it's around 19, down from 55 when we first flagged it to our subscribers.
How about other commodities? And I guess I'm going to bridge the broader question about commodities in this administration. And then specifically, if we can talk about strategic materials that are tactically important to countries or not, unevenly distributed, and that we maybe have presumed in the past we had access to globally because of global supply chains, et cetera, but which now various alignments and is calling into question, whether it's the BRICS Plus coalition or whether it's any other geopolitical factions, and specifically now given the Trump presidency and the announcements that he's made around that.
Yeah, if you think about what Trump is trying to accomplish, he would like to settle the war in Ukraine as quickly as possible on terms that are palatable. I don't know that he's going to be able to do that. I think he is being badly misinformed about the current state of the situation in Ukraine. But he would like to settle that. He's not that interested in Europe. I don't think he has all that much respect for Europe, if we're being honest. And he would like to fight an economic war with China and win that economic war with China. And when you look at Trump's actions since becoming the president-elect and now assuming office, it all sort of makes sense when viewed through that lens. So Greenland is home to an amazing bounty of just the rare earth metals and other critical elements and minerals that we need to free ourselves from the monopoly that China has made for itself in these supply chains, which we have enabled through the quarterly pressures of Wall Street and the deindustrialization of the U.S. heartland. To be clear, this was something we wrote about last year in a piece called Geopolitical Warfare. China is willing to pollute for geopolitical advantage, and we're not. And that's how they make all the magnesium, and that's how they process all of the rare earth metals, and that's how they dominate all of the polysilicon ingot manufacturing and wafering and all of the nasty things that we don't like to do over here because we live in a nice garden that we shouldn't blemish with dirty industrial supply chains. So China has got a chokehold over major supply chains that are critical to the U.S. military. I think the U.S. Department of Defense is quietly and strongly backing Trump on these initiatives and is probably happy to see him ascend to the presidency again. And even the Alaska executive order that we covered in great depth in Whiplash this morning is about securing many of those same metals and minerals in the interior of Alaska, which has been basically walled off by a 50-year-old protest against the building of a single east-west road measuring 200 miles that Congress thought it had legislated into reality in 1980, if you can believe it. That's how long this war has been going on. And we think that's the ultimate test case for how effective these orders will be. And then even when you look at the Panama Canal, China, in Trump's mind, China controls that, and that's critical to the U.S. Economic resurgence that he is planning. And Malay's presence, at the inauguration, I think Trump is bringing back the Monroe Doctrine, spheres of influence. He probably recognizes and knows intuitively that the U.S. isn't the global superpower alone on top of the podium anymore, and the world needs to be shared predominantly with Russia and China. And there's plenty in the Western Hemisphere for the U.S. to feed its industrial resurgence. And so I think it's very clear what Trump wants to do. Sometimes he says things sort of inarticulately. And he's a person who you should take, sort of seriously, but not literally. He gets things wrong, but on intuition, he's exceptionally high. And I think the direction he's going to go is very clear. And I think investors and analysts and leaders of companies need to see the direction he's going and recognize that he's a force of personality and is likely to move the country in that direction in a swift manner.
This is a little detour that I can't resist because you mentioned wafer fabs and the processes, the dirty industrial processes that perhaps are frowned upon here, not in our backyards, et cetera. But we interviewed another guest who made a distinction about not just the raw materials and the smelting of them and that sort of thing, but in the high tech, which you mentioned AI as a force to be reckoned with going forward, era, the idea of fabs for semiconductor manufacturing, et cetera, are going to continue to grow in strategic importance, and yet so many of them are located in China, other than perhaps for the major player of Intel, which has fabs all over the world, including in countries that are, well, within the U.S., but also within countries that are allies of the U.S. Does Doomberg have any analysis of the semiconductor industry and whether Intel has an advantage now, given Trump's positions that may question our accessibility of fab production from China, et cetera?
Well, yes, we've written about it extensively. It's something we've studied thoroughly. And small correction, unless, of course, you think Taiwan is currently part of China. Taiwan is a dominant super player, especially in the high-end fabs for the specialized semiconductor chips that are required to train AI algorithms and LLMs and so on. China is urgently trying to establish a domestic supply chain to insulate itself from being cut off from Taiwanese supply in the event of hostilities breaking out over that sensitive issue. The U.S. leads in sort of design, but we are miles behind Taiwan and then Korea and Japan to a much lesser extent here, and trying hard to recreate that. I don't think Intel is the company that we would place much in the way of our personal bets on, not that we gamble in the stock market, but our position has been China will win much sooner than people think, and they will become self-sufficient in the semiconductor space far sooner than analysts are projecting. And we choose those words carefully because dominant leader and self-sufficient are two very different things. One is an economic measure and the other is a military measure. And I think Xi Jinping's primary objective is not to become the global supplier of high-end semiconductor chips. It is to have a sufficiently robust domestic supply of those things to the extent that his military needs them to satisfy the ambitions that he has to confront the U.S. Across economic and military objectives. And Taiwan today has a near monopoly control over the highest end chips, and China is being sanctioned out of that market, which we believe is only accelerating the speed with which they close the gap to the international competitors.
Do you foresee Taiwan growing in singular importance as a geopolitical hotspot, or do you think that China has enough of a contingency plan to do this workaround and do things domestically on their own soil that they need to get done?
Yeah, so one of the things we chronicled is that Taiwan actually has a fatal weakness, which is it is an energy vassal. It imports 98% of its fossil fuel needs, and it has gone down the path similar to Germany of deconstructing its once formidable nuclear industry. A lot of complex history and social challenges, and I think Chinese influence to make them especially vulnerable. So those fabs could be shut down in a week with a naval blockade, which China has routinely been practicing to do as a demonstration of its power to the U.S. And if they did, and China was self-sufficient, we would be hurt much more and much more quickly in that regard than China would be, which is, I believe, the primary driver for Xi Jinping's desire to become self-sufficient in semiconductors, because that will allow him to put the squeeze to Taiwan. Taiwan not only has to import its fossil fuels and has no nuclear energy to speak of, and has been foolishly investing in renewables and various schemes. It also has hardly any natural gas domestic storage. So if they were ever cut off from LNG supplies, for example. It wouldn't take long for them to no longer be able to produce electricity. And if you can't produce electricity, Lord knows you can't run high-end fats.
Among other commodities, we haven't spoken about food. Can we talk about your outlook for the security of the food supply chain under a Trump administration? There have been a remarkable number of unexplained mishaps, explosions, fires, shutdowns, et cetera, at food production facilities all across the U.S. over the past half decade, and restrictions on non-scalable things that really discourage anything that's smaller than big agri producers from succeeding. Do you see any democratization of the food supply, or under a Trump administration, any improvement in the food security for people domestically here in the U.S.?
So we would fade claims of a sort of broader conspiracy of explosions and fires at food processing facilities in the U.S. as anything more than social media highlighting them. Broadly speaking, industrial accidents happen a lot, and we have an enormous number of such facilities, and so a small number of fires can be blown out of proportion to great extent on platforms like Twitter. But to your broader question, actually, I think there is a significant risk to the food supply, and also an event that is going to, we believe, be inflationary to food prices, is the crackdown on immigration. The dirty little secret of the food industry is that there's an enormous amount of questionable labor practices occurring in that sector. They do the types of jobs that many young Americans probably would view as unsavory or undesirable. Many of them come in on what's known as H-2A visas, for all the talk and arguments on Twitter about H-1B and whether those are being abused to keep American wages down, and they are. Unquestionably, they are. H-2A is an even greater scandal because there's all manner of forced labor, poor working conditions, cartel involvement, vast migrations. These visas are given for, quote, seasonal work, which is often a euphemism for backbreaking work for hardly any pay under conditions that we wouldn't tolerate and under the threat of violence if the work isn't done, which in our mind is sort of qualifies for the forced labor term that we accuse so many other countries of participating in. And if you look at the employee base of, meat packing plants and so on, I think we'd find there's an awful lot of, let's call it gray area labor tactics being used to keep prices low. And this is driven by the Walmarts of the world and, those who control the channel to the consumers, putting enormous pressure down the chain to keep costs as low as possible. And also China does own one of the largest meat packers in the country. And so that does feed the sort of conspiratorial stuff. But beyond that as well, not just sort of the food side of things, but the agricultural side of things as well. I mean, if you look at who works the farms during harvest, it tends to be these roving foreign nationals, let's say, who come into the country for that purpose and then remit the money they do earn, the hard currency they do get in exchange for their labor back to their families in the countries of origin. That is all going to come under a significant microscope, and that can only be inflationary to that part of our economy.
How about agricultural land ownership? That's been a big story over the past half decade as well. Expansion of some big names. Bill Gates comes up, and others, and China as well in the U.S. Is that something that? And it's essentially a type of a commodity. It's just not portable. But anyway, agricultural land ownership and control of that aspect of the food supply. Anything on your radar about that?
Broadly, Trump is going to be pro-billionaire. He himself is a billionaire. He likes to be around billionaires. He's susceptible to the influence of billionaires. Look at who he has surrounded himself with during the transition in the early days. And private equity, venture capital, these types of people are going to get favors from Trump. And to the extent that the BlackRocks of the world are buying up land in California to squeeze everyone else on water rights, or maybe it's not BlackRock, and I certainly don't want to accuse them of doing something they haven't done, but speaking sort of more generally, I don't know that that's going to be discontinued under Trump, because he is susceptible to the billionaire class. They have direct access to him now, and they will sell him on how this is all capitalism and efficiency and all that stuff. So I'd fade the prospect of the small farm, to the extent that any still exist, and the ongoing consolidation in this space looks likely to continue. That's our sort of one-dimensional view of what has transpired this week.
If we could turn our attention finally to gold and silver, they were notably, both of those markets were hit hard immediately following the Trump election. Some people have theorized that a lot of the retail public investing demand prior to the election and for previous years was out of widespread concern about people needing to protect their finances against government actions from the previous administration, but that would be relieved. Those concerns would be allayed by, okay, we've got Trump elected now. He's got our back. We don't have to. All these horrible things that have been projected, such as market crashes and bank failures and that sort of thing, are not going to happen. So we don't need the protective security of hard assets like gold and silver. What's Doomberg's view of this whole scenario? Because now gold is back again at knocking on all-time nominal highs against the U.S. dollar already. Never left that against other world currencies. But what is Doomberg seeing the big picture around precious metals?
So embedded in your question is sort of the short-term reaction to Trump's ascension. And I think, to be honest, like that he would take the oath and get to office was not 100% until it happened. I think in the short term, that was largely driven by the boost to cryptocurrencies that Trump brings to the office. The overlap in the Venn diagram of people who are hesitant to hold U.S. dollars for the long term includes a fair number of Bitcoin hodlers and gold bugs. And the genesis of their desire is oddly similar. And so to the extent that the incremental dollar was chasing the Bitcoin spike to all-time highs and the Trump coin and whatever nonsense that was all about, it does affect gold in the short term. But I think the long-term driver of gold is the BRICS, China, Russia, India, South America, Brazil, Indonesia now. The U.S. Treasuries are no longer neutral reserve assets. They have been made into political tools of the G7. And if you're not in the G7, it is possible that you might one day come under the disdainful eye of the U.S. Treasury, the eye of Sauron, if you might like. And Trump's sort of pushing for the canal and calling Canada the fifth first state and threatening to take Greenland. All of that is sort of spooky to central bankers who are looking at their reserves that they may hold in U.S. Treasuries or European debt and decide that gold is the only truly neutral reserve asset. It's nobody's credit risk, as we like to say. And so in the short term, the spikes are probably due to the whiplash of the Bitcoin price. I mean, that thing swings 15% in a day like nothing happened. But in the long term, I think gold is reestablishing itself as its rightful role of neutral reserve asset for the settlement of imbalances in international trade. And we are deeply long gold, personally and other members of the team. So full disclosure, we're not talking our book. We are positioning our book to our talk. And we think that 3,000 is going to eventually come, and then who knows? And then you said an interesting thing, like the nominally in U.S. dollars. In fact, I just think the price of the U.S. dollar is the inverse of the price of gold, which is how we view things. And so it's inherently self-correcting for inflation. So I think the gold price is real, always. And that's why we like to measure like long-term oil prices in ounces of gold, for example, because when you quote the price of oil in U.S. dollars, you're making a judgment on the price of oil and the price of the U.S. dollar.
If people want to follow your analysis, and it is broad across many different asset classes, as you've demonstrated today, how should they get connected?
Yeah, you can find everything at Doomberg.com. We used to say we write 6 to 8 articles a month. We're probably going to up that a little bit in 2025. We have so much fun doing it. Why not do more? Our free subscribers get previews to all of our pieces. Our website also has all of our podcast appearances like this one, which we'll link. And then we have a pro tier as well that get all of our articles, but also we do a deep dive monthly webinar and presentation style that we put out to our pro tier on subjects like this, or China through the lens of energy, or what this how the war in Ukraine will end and things like that. We have a lot of fun doing it. It's all we do now, and it's a total blast. And I know this is the first time you and I have interviewed together. It was I really enjoyed it much as I love talking to Elijah. It's great to talk to you as well.
Well, we've certainly enjoyed your visits here over the years. And folks, if you don't want to miss a single episode with Doomberg on Liberty and Finance, make sure you're on our free mailing list by going to libertyandfinance.com, put in your email address, click submit, make sure you confirm on the confirming email. Then you're in. You'll get one email in your inbox per day, and we don't share your email address with anyone. It's completely private. It will have all of our Doomberg interviews as well as all of our other guests and any weekly specials. And thank you, Doomberg, once again for joining us here with our audience, whom we're delighted to share your visits with on Liberty and Finance.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 27th through February 3rd, 2025, while supplies last. This week, backdated 1-ounce silver Austrian Philharmonics are just $2.85 over spot, one of the lowest prices we've had on a sovereign coin in years. Next, AU pre-1933 $20 gold St. Gaudens coins are just $50 over melt. We also have 90% constitutional silver or junk silver at just $1.69 over spot per ounce. We also have the 1/10 ounce UK gold Britannia coin at just $29.99 over melt. And finally, 1-ounce gold Canadian maples are just $59 over spot. Again, one of the lowest prices we've had on gold sovereign coins in years. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.